Right, welcome to another video, guys. Rams here from FXTZ, and what I want to cover in this video, guys, is a very important topic with regards to um, you. Most of you guys call it market manipulation. However, I don't call it market manipulation. I simply call it money making tactics from the big boys. So you have to realize, guys, that the majority are pretty predictable in the way that they trade. And the market makers, the brokers, they understand how the majority think, and they understand how the majority are going to trade and when they're going to perform those trades. So let's take an example where there is a resistance area here, support level here. It's a bit too thick. Get rid of this, do it again. Okay, so let's say you've got a resistance level here, guys. You've got a support level here, and the market's been trading within this range for a while, and you're expecting a breakout soon of this range, let's say to the upside. So let's say we've gotten here and we've begun to get close to this, approach this resistance area once again, and then you see a breakout. Now, most traders at this point, when they see a breakout of the resistance, and what the brokers actually teach you is, on their free education, they actually teach you that when after a range, when a price breaks out of either a resistance area or support area, then that's the best time to take a trade in that direction. Well, why do they tell you that? Well, they tell you that because they know what you're going to do. So if they teach you what to do, then they know what you're going to do, and they act upon what you're going to do with a very simple yet very smart tactic. So they understand that the majority are fearful of losing their money in the markets, therefore they will usually place their stops around this area here. So let's say you've got you've bought a trade. So let's say you've taken a buy. So let's say you've opted a buy here at this point here, and you've placed your stop loss around this point here. Okay, now you have to realize, guys, that there will be a whole bunch of other people doing the exact same thing as you. So they'll place their stop loss. There'll be a whole bunch of stop losses at this area. Okay, so you're expecting the price to go up. However, it starts to come back down. Okay, starts to creep its way down and then stop you out. Okay, and then it will spike back up. Okay, and then continue to the upside. Okay, so you've been stopped out now, and the trade continues in your favor. And this happens time and time again, guys. Now, why does it happen? It simply happens because like I said, the market makers understand where you're going to put your stop losses. So they simply push the price down to spike you out, take all your stops out, make a whole bunch of money for them, millions and millions for them, because they've taken out the 90% of traders in the markets, and then the trade runs in the direction that you were planning on following anyway. So how does this happen? Well, it's because the majority, guys, are fearful of the markets. Therefore, they usually place their stop losses in areas which are not based on technical analysis, but are based on how much they're willing, how much they can bear losing on one trade. Okay, so this is the majority's psychology. They say to themselves, okay, I can make this much, okay, and I'm willing to lose this much. They have gone off some technical analysis with regards to their strategy, but they haven't gone off the technicals with regards to placing their stop losses. And most of the time, it's not even. And most of the time, their take profit is not based on any proper analysis anyway. They simply are going off what they want to make and what they're willing to lose. So, as you can see, the majority think in a subjective way, and they do not take the right approaches when it comes to trading the markets. So that's how the market makers take your money every single day, and you'll find that on the charts, guys, it's like clockwork. Every single day, they'll do the exact same thing, and the majority will always fall for it because they get so sucked into the charts that they they feel it's just repetition. They've got themselves into these terrible habits, and the big boys capitalize off them because they actually go off the technicals. The technicals. They go off um, they go off their technical analysis, and they go off the knowledge that they have of the majority psychology. So, how would you? What's the solution? So, what's the solution for these breakout trades, and how can you avoid getting taken out every single day when there's a whole bunch of stop losses here? So, what would you, as the contrarian, do? So, what would you, as the contrarian, do with regards to making sure that you reduce the probability of you getting stopped out? Well, the best thing for you to do, guys, is to place your stop loss in an area where the majority of stop losses are above yours, and reducing the likeliness of your stop getting hit, because they understand that wherever there's a breakout candle, um, the stop losses are usually very close to that breakout candle. So it's very simple for them to just take you all out and then continue to the upside, or to the downside if the trade is a sell trade. So here's the whole bunch of stop loss orders. Where would you, as the contrarian, place your stop? Well, you'd place it somewhere below all of these stop losses. Therefore, you're reducing the likeliness of the traders stopping you out and then letting the price go. So if you were to have placed your stop loss around this level here, then your stops would be safe. Okay, you wouldn't get stopped out here, but the majority would have got stopped out, and then you ride the trend with the market makers. Now, of course, this is easier said than done, because it's very, very easy, and it happens time and time again that the majority will get sucked into the charts, and they won't make objective trading decisions. They won't make smart trading decisions. They'll make emotional trading decisions. Now, of course, what your challenge is now as the trader is to train yourself to think more like the market makers rather than the majority. And most of you guys that watch this video will continue to do the same things over and over again, and you won't pay any attention to what I've just showed you here, which is why you're going to continue losing money every single day. However, if you take the right approaches, if you take the approaches that I teach, then you can profit with the market makers and be in that 10% bracket of traders that make money consistently. Now, this is just an example of a breakout strategy. The same applies for a pullback bounce strategy, for all the other strategies which you apply onto the markets. I just use the breakout strategy because this is the most typical strategy which the majority will take, and it's the most typical strategy where the majority will get stopped out only to find the trade going back in their favor. Right, so not a very long video this one, guys. I hope you now, however, have a better understanding of how the market makers take your money every single day, and I'm sure now you're more aware of the way that you've been trading and the errors that you have been making. And of course, your challenge is to fix those errors and get yourself into good trading habits. And the best way to get into good trading habits is through development of those habits, through osmosis, through being mentored by somebody who's achieved what you want to achieve. Of course, this is only scratching the surface of this particular topic. However, the goal of this video was to just make you aware of the mistakes which you have been making. Now, some of you, like I said, will continue to do the same mistakes. However, if a few of you benefit from this video, then this video is pretty much a success. So I hope you've enjoyed it. I'll see you in the next one, and I'll cover another topic which will be of use to you once again.